Yo, what's going on, guys? This is your boy Trillionaire Mac, and welcome back to another video. So in this video, we're going to be breaking down a Euro USD day trade. Not only did I take this trade, my students did, and yes, you guys already know, so did everyone within the Telegram community. Now, we're going to go over the video that was sent to the Telegram community the day before this trade takes place, all right? And then we're going to break down this trade, and I'm going to go from top to bottom, of course. Okay, now this is more of a day trade, so we're going to be sticking to the lower time frames. But really, guys, I want you all to know that there is nothing stopping you from producing these same results, right? This trade was a 16.65% gain on investment, just risking 1% of your account. Guys, I can't really stress this enough how crazy this is. 16.65% in a morning. It's absolutely bananas. But we're going to get into it. If you're not subscribed to the YouTube channel, what I want you to do is pause this video, subscribe to the YouTube channel, go check out some previous content. If you want some educational content before it releases in the springtime, feel free to check out some of the earlier educational content that was released probably around September, October of last year. All right. And you're going to want to hit that bell notification icon because, like I said, moving closer to spring, all right, we are going to be releasing a lot of educational content on this platform just for you guys. All right, we already have a supply and demand video coming, change of character video coming, inside bars. It's a lot. It's a lot that's coming, and I'm really excited about it. And also leave a like on the video. It definitely helps out with the algorithm. Thank you guys for all your support, and let's get into the breakdown. So before I actually show you guys the breakdown, you guys know me, okay? I have to show you guys what was actually said in order for the Telegram community to take advantage of these trades. So what we're going to do is we're going to go to the recording, which is already up on the screen now. Okay, I'm going to press play. I'm going to put it on mute. Should I? Let's not put it on mute. I'm just going to press play. I'm going to let you guys listen to about 15 seconds of this here. All right, here we go.
All right, so Euro USD. We're actually looking for a possible sell opportunity on Euro USD right here within this area. So once price taps into this region, what you guys can look for is an M1 sell entry schematic. Let's go to the H1 really quickly. Or the M5. It's completely up to you guys. I'll put both in here. So we can look for either one. Okay, it's completely up to you. All right. Either M5 or M1. This may even be a day trade for tomorrow morning, so be on the lookout for that.
All right, and now we're going to go on mute. So essentially, in this instance, okay, let's just go back just a little bit. Okay, I'm essentially explaining to my Telegram community what I'm looking to day trade on the next day. Okay, and usually if there is a great day trading opportunity, usually I will kind of throw that in there. All right, especially if the higher time frames aren't really giving us as many trades as we want. All right, it is only February, second month of the year, but with the pairs that I trade, because you guys know I don't trade cross pairs and I don't trade minor pairs outside of GJ and EJ. Okay, but everything else is simply just major currency pairs. Okay, and sometimes when you're trading major currency pairs, they go through phases where, you know, they'll be active, or phases where the higher time frame won't be as active. But that means that we can still take advantage of the lower time frames to take advantage of day trades. So if you're someone who is a part of the Telegram community, if the higher time frame trades are not going through, then of course we will discuss day trades for you guys. All right, but if you're a student of mine, then you understand exactly what I look for my day trades, which is what is really important. All right, because then you guys can produce these results on your own every single day if you would like to. All right, so let's start on the M15 time frame. Actually, no, let's start on the H1 time frame because that is where I gave you guys. Ignore all of this here. Okay, this is current day price action, markups and things like that. But I wanted to show you guys the CPI trade that took place last week. I just didn't have any time to record this over the weekend. So as we can see, price was where was price? Price was somewhere within this area, and we wanted to see price essentially pull back up into this zone here. Okay, so if we go, let's just go back to the M15 actually. Yeah, let's just stay on the M15. So price pulls up to this area here, okay, and then pushes down. Now, within another video, I'm not going to pull up the second video because I go into a lot of in-depth information within that video for the Telegram community, but within that video, we saw essentially what we needed to see take place, right? Price pulled into this area, on the H1 time frame, then pulled down, and I told you guys we would look for price to pull right back up into this area and then take M1 or M5 entries. Now, I like to take M1 entries personally. M5 is also good, okay? Don't get me wrong. I will take M5 entries, and if you were on the M5 time frame, okay, then you would have simply just took advantage of this here, okay? But I was on the M1 looking at a little bit more of the nitty-gritty information, which is not always a bad thing, right? So let's go back to the M15 just to mark up where we're going to target. So we can see that this here is where we're looking for price to enter, okay, if you were a part of the Telegram community. And then, of course, we have our supply down, or our demand, excuse me, down here that has not been broken yet by our supply, right? So if we go to the M1 time frame, price trades into this region here, okay? We see that we have sweep of liquidity to the upside, which is here, right? Then we have our change of character, change of momentum to the downside there, all right? But what is most important is timing. Timing is most important. So in this case here, okay, you guys know me. I used to trade pre-New York, and I used to trade, during the overlap of London and things like that, moving closer to New York Open. Now I'm more of a trader who focuses on New York session. Okay, that's not necessarily a bad thing if you're someone who doesn't focus on New York session, but just understanding price algorithm and things like that. And understanding runs and reversals and things like that as it relates to session times, New York session is going to be our bread and butter. Now, those of you who decide to join the 3-day masterclass for day trading, that will be April 1st, 2nd, and 3rd, don't worry, links have not been released yet, okay? We will start talking about that moving closer to April. So the beginning of March and then all of March, we will be giving you guys more information on the masterclass. But within the masterclass, we will have an entire section that focuses on session times, okay, and when you should trade, when you should be looking for entries and things like that, because it's very, very easy to hop on the charts, right? And let's say you have a point of interest, and let's say it could be 3 p.m. and you see something like this here and you take a trade. It's very easy to do something like that. But when you guys narrow it down to a specific time of day or multiple times of day, okay, where volume is increased, and I'll also show you guys during the masterclass how to figure all this stuff out. But when you enter a certain time, you're expecting your trade to be fulfilled within a certain amount of time as well, which is usually why whenever we enter a trade during New York session, by the end of New York session, we could be up 12%, 15%, 20%. It depends on whatever the market gives us, but at least we have gained percentages, okay, which is most important. So let's just get rid of this here. There we go, perfect. All right, so in this case here, okay, price pushes to the upside. And of course, first we're going to talk about structure. Now, to me, liquidity is what is very, very important, because price is going to run from liquidity pool to the next liquidity pool. But it's structure that is going to give us small hints of what price is getting ready to do. Okay, so we can see that we have this low here, we have this high, right? We have this higher low, we have this lower high. Okay, I'm not going to consider it. We have this tested low here, okay? And then price creates microstructure on the lower time frame within this area, creating micro uptrend structure, and then we finally create this higher high here, right? So as we can see, price creates a low, high, higher low, higher high, and then price breaks to the downside and creates this lower low here, okay? There has to be something that is responsible for creating that lower low. Okay, that should be what is going through your mind. What is responsible for creating this lower low? Usually it's going to be some type of supply or demand. Okay, in this case, because it created a lower low, it's going to be supply. So we see that we have some type of demand that comes into the market here. We have demand that comes into the market here. And we also have our apex demand that comes into the market down here within this area. But what you're going to be looking at is what, or in this case, which demand did price interact with? Which demand was responsible for price creating a reaction and then creating a failed reaction right after that. So we can see here, price pushes to the downside, taps into this demand region, creates a failed reaction. Okay, we can see this inside bar here, letting us know that on some type of time frame, okay, there was some type of supply to come into the market. Also within the intraday trading masterclass, we will be breaking down how I select my supply and demand points of interest, okay, and what confluences I look for in order to consider it a valid supply or demand point of interest. So we can see that demand comes, or supply comes into the market here that takes out this demand, but not only takes out this demand, but also continues to push price to the downside to take out our apex demand, which is right here within this area. So my entry for this trade, okay, was simply here. Okay, now if price would have failed this, I would have looked for price to trade a little bit higher, maybe into this region here with my stop loss above this region here. As you guys, move forward with trading, you're going to realize that the market is very dynamic. Okay, it's very, very dynamic, but there are solid rules to follow with a dynamic market. Okay, and if you follow those simple rules, you will end up on the right side of the market more times than not. Okay, and that should be the goal of trading. The goal of trading is to preserve your capital, but when you do risk your capital, the goal should be to end up on the right side of the market, not the wrong side of the market. Okay, but we also have to flow like water. Okay, we have to be very, very fluent when we are trading. We cannot deviate from our trading plan. We cannot deviate with our psychology or emotions, but we have to be willing to mold to the market, essentially. All right, now we'll get into psychology on the masterclass as well. Okay, so I'm not going to get into too much psychology right now. I'm being very careful about what I say because I have some sauce for you guys. But essentially, we can see that price wicks us in here. Okay, this was a 2 pip stop loss. Okay, excellent stop loss. This is exactly what I'm used to. This is exactly what you guys can expect from the day trading masterclass as well. Okay, you can expect to understand the market enough to be able to apply my strategy and come out with these 2 pip stop losses where price will literally wick you in and then continue to flow in the opposite direction. All right, so we can see with one 1 minute candlestick, okay, by the time this candlestick closed, you were already up 13.3%. That is an entire FTMO account challenge passed within 1 minute, 2 minutes, really, because this candle wicked us in and then the next minute candle pushed to the downside. So within 2 minutes, you're up 13.3%. This is why once you actually understand what to do as an intraday trader or as a day trader, this is why we have so many students passing their FTMO account challenges, right? This right here, it only takes one great trade per week to pass an account challenge, become a funded trader, and stay a funded trader. It only takes one trade per week. And if you can be selective about what trades you take during the week, right, then you can have an unlimited amount of income coming in, right? That is just a fact. I've seen students do this and replicate this over and over and over again. I have some students who only take one trade per week, 5%. If they take a trade and it's -1%, then they'll take another trade. If that's a -1%, then they'll take another trade. And once they hit that 5% trade, they're done for the week and they move on to the next week. If you're someone who can have the discipline to do this, okay, then you're going to be sitting between 20 and 25% return on investment every single month. That means if you are a funded trader, you can be expecting $20,000 to $25,000 return on investment every single month. And then you can decide how much you want to withdraw of that $20,000 to $25,000. Guys, it's very, very simple to become a funded trader and stay a funded trader, but it's going to take discipline and it's going to take the knowledge to do so. Where is that knowledge? That knowledge is here at Matrix Trading Group or within the institutional trading course, so feel free to check that out. Links are in the description. If you are someone who just wants to pass your funding challenge based on higher time frame trades, then also check out the Telegram community. I would love to have you a part. Now, as it relates to our target, okay, our target in this case was simply, I just targeted this here, okay? It was a CPI news event, okay? So I really didn't want to be in this trade all too long. I knew that it was a news event, so did my students. We could have targeted this low here, okay, which you guys will see was hit, and I did have students who actually targeted this low, which should have been the low to target based on our understanding of the market. All right, let's place this here. If price works with me, there we go. Perfect. Okay. There we go, at that wick. And then if we move over, we can see that price completely smashes this low, which is what should have been anticipated from this move, right? So if you held this entire move, this was a 20.55% trade. Guys, absolutely wild, absolutely wild. Now, if you watched the last trade breakdown, if you haven't, feel free to go check it out. If you watched the last one, this was a 7.28% trade, okay? Very next day trade, 20.55%. All right. So I just wanted to get on here. I want you guys to go ahead and backtest this area. Okay. Now I will have some people ask me, why did I take the trade here instead of looking to take the trade here? And those of you who join the masterclass, you guys will know the answer to that question. All right. But when you're ready to take your trading to the next level, when you're ready to increase your effectiveness and efficiency on the charts, I am just one click away. With that being said, I'll catch you guys on the next video. If you guys have any questions, feel free to drop them down below. But this was a banger trade, and I just wanted to get on here and just give some encouragement to someone who maybe is having a difficult time understanding the markets. Just keep going. With that being said, I'll catch you guys on the next one. Much love. Peace out.